looks like rumors of retail's demise have been greatly exaggerated. And that's one of my takeaways from the beaten down stock of Target, which surged nearly 18% today in response to a much better than expected quarter. Now, you don't get that kind of earnings rally unless the expectations coming into the quarter are ridiculously low, given that Target stock had plunged from $269 at its peak 2 years ago to $110 yesterday. People weren't expecting much. I think this quarter showed that the market was wrong to count Target out because it's always been a superb merchant with unique private label goods and a sense of newness that never, gets old. While the top line wasn't what I wanted, Target delivered a monster 63-cent earnings beat off a $1.47 basis. This story is about massive margin improvement and a return to what I'd actually describe as normalcy, even in an uncertain environment. So is this the start of a more sustained recovery? Let's check in with Brian Cornell. He's the chairman and CEO of Target. You had a better sense of the quarter and how about the holiday season and next year? Mr. Cornell, welcome back to Mad Money.
Jim, it's great to be here. What a beautiful new set.
Oh, thank you, Brian. Yeah, I love the way that we have decorated it with some beautiful Target merchandise. This is what I'm talking about newness. You're doing a lot in the stores that we haven't seen before.
Well, it's been a really great day for our brand, Jim, a great day for the team, and hopefully a great day for shareholders. And newness plays a big part of it. So, we're excited about the progress we delivered in the third quarter, and there's more to come. And I think today was a really important demonstration of the durability of our model and our ability to grow our profits despite some weakness on the top line.
Right. Now, throughout your conference call, and when I speak with you, you are, I would say, preternaturally cautious given the fact that there are costs that people, particularly people on Wall Street, frankly, you're down here, may not even understand. It just costs a lot more to be alive right now.
Well, you heard me talk about the fact that if I compare pricing to pre-pandemic, not just for Target, but across the retail industry, food and beverage prices are up on average 25% versus pre-pandemic. So those have put some real pressure on the consumer's wallet. They've had to make some tough choices. If you're a parent right now with a baby, it's costing you 30% more than it did pre-pandemic for baby food and formula. So it's forcing consumers to step back. They're on a budget. They're shopping carefully. But they're still spending, Jim. And I think it's one of the things we should talk about. We delivered $25 billion of sales in the third quarter. We're on track to deliver over $100 billion of revenue for the full year. And while there's opportunities for us to continue to accelerate our top line growth, half of our business and half of that revenue is still coming from discretionary categories.
Right.
Apparel and home and hardline. So they're still buying those categories. We'll generate over $50 billion of sales in those categories.
And some of those discretionary are yours, your label, which absolutely. I regard as a premium product, even over branded.
Well, I think it's what makes us really distinct in the business. It's that combination of our own brands, our great national brands, and then some of those partnerships that I know you love to talk about.
Sure do.
If we're in a store together, we'd be taking a walk right now, and we can see the partnerships, our own brands, our national brands come to life. If you walk into a Target store today, the first thing you see is Starbucks.
Right.
It's been a great partnership for us, and I've known their new CEO,
Laxman is an old friend of yours, right?
But one of the first things our team has done together is now take that great in-store experience out to the drive-up lane. Right. So if you pull in our lane, I can get your favorite pumpkin spice product and walk it right out to your car. And it's early days. We're bringing 100,000 orders out every week. So it's a great partnership. In food and beverage, Jim, Good and Gather, a brand we launched just before the pandemic, is now a multi-billion-dollar product. So
and it'll be great. We have a great Thanksgiving offering from them.
You bet.
In the meantime, Ulta's doing quite well. But now there are things that you and I talk about that I have been uncertain about. One is that there had been, you are very good to your employees. Congratulations for closing on Thanksgiving so they can be with their families.
Absolutely.
But we also can't have them be policemen. So you've had some theft that we know has gotten to you. It looks like that you're starting to get that down, which can really help in the end make gross margins be better.
Well, Jim, this is an industry-wide issue. Right. And we've certainly been upfront from a kind of our share of voice standpoint because we felt an obligation on behalf of the retail industry to make sure we got more focus at the federal, state, and local level. I'm really pleased with the progress that we've seen. And Matt Shea at NRF and Brian Dodge at RILA have been great partners. But just in the last year, the federal level, the Inform Act has been passed. It's going to make it a lot harder for these crime rings to monetize the items that they're stealing. We're seeing a lot of support from the Department of Homeland Security, and they're activating their offices across the country. And then retailers now are walking stores with local district attorneys. So there's a lot more focus.
Wow.
But I want to make sure it's clear, Jim, this isn't a Target issue. This is a retail issue.
No, that's a good point. But here's some Target issues that I am concerned about. You used to hire 130,000 people for the holidays a few years ago. Now you're only hiring 100,000. Does that mean you're concerned that it won't be a big holiday season?
No. Actually, Jim, it's quite the opposite. One of the things that we've changed the last couple of years is making sure our existing team gets access to those additional hours during the holiday season. So we want to make sure they get a chance to say, you know what, we want to work more hours. We want to take advantage of the holiday season, and then we'll staff accordingly with seasonal team members. But we're geared up for the holiday season. We're leaning in, despite the fact that our inventories were down 14%.
Well, that also made me feel like, well, then you probably have some extra cash. You had 460 million shares. You used to have 900 million shares if you go back to 2004, but you're not buying back stock. Well, that to me shows maybe you're not as confident about your stock.
Oh, Jim, no, we are. But sitting in this environment today, we think it's appropriate to be cautious, to make sure we preserve cash. We want to make sure we're investing in our business. You'll see that continue into 2024 and beyond. And we want to make sure that dividend we pay is something that our shareholders can count on quarter after quarter.
All right, that's fair enough. I do, the reason I'm concerned is because I always like the Target dividend, I like the buyback, I like the package. Right now, I know I'm getting the good dividend, and there's absolutely no problem with that. I know you care about the balance sheet, which is absolutely terrific. But is it possible that, given what you said about the consumer, that we could see down comps for another year, Brian?
Yeah. Jim, we are laser focused right now on restoring top-line growth. Now, this is an important step forward. We said in 2023, we've got to make sure we're restoring profitability. And, we've grown our profits by $1 billion in the first 3 quarters. That was actually our full-year objective. So we want to make sure we're improving the bottom line. But category by category, from both a store standpoint and a digital standpoint, we are focused on restoring traffic and growth to our business.
All right. Well, if that's the case, then tell me what you're restoring the traffic to. What are people excited about? Give me some ideas for Thanksgiving. Give me some ideas for the holidays.
Yeah. Jim, it comes back down to the combination of great newness, and we're going to have 10,000 new items in our assortment. The power of our own brands and affordability. And if we were walking our store today, you'd see that great combination of some of our unique own brands.
Like Figment?
Like Figment.
Tell me about that, because it seems intriguing.
Well, it's a great new own brand, Jim. And we've got great brands in home like Threshold.
We have billion-dollar brands.
Great partnerships like Hearth and Hand with Chip and Jo.
Right.
But Figment is off to a fabulous start. And again, it's an important reminder that consumers are still looking for those great discretionary items. So great style, great quality, at an amazing value. And we're seeing that brand get off to a great start.
Well, look, I got to tell you, when I saw the stock today, here's what I said. I said to myself, I can't wait to see Brian, because to me, Target's back. But then I don't want to insult him because he never went away. But the fact is, this was the resilient, strong Target that people want to invest in. And I think this was a point of demarcation. Stop me. You know I'm bullish on Target. Tell me, Jim, no, you're going too far. Because otherwise, I'm going to say even up 19, people should buy it.
Jim, you know I'm bullish on Target. And we're playing the long game. I mean, sitting here today, we're $30 billion bigger than we were pre-pandemic. And importantly, our traffic has grown by 20%.
And yet your stock versus then?
Well, we've got to deliver consistent results quarter after quarter, both on the top and bottom line. We've got to get back to playing our game, investing in our stores, our digital assets, investing in our brands, extending those partnerships. You talked about Ulta Beauty. We have over 500 Ultas inside of Target.
Right.
We'll keep expanding.
I know from them that the sales go. Last question that I have is, you are still committed to the inner city. I know you did have to close some, and there were theft issues, but you are still committed.
Jim, we're right here in New York City. Think about how far we've come. When you and I first started talking, this is my 10th holiday season.
I know.
We didn't have a presence in Manhattan. We've got 12 stores now. We just opened up a new one in Union Square.
People raving.
Those stores are part of the community. So we are very committed to those stores. We're committed to growing our store base. We like to open stores. We opened 21 this year. You'll see us continue to open up both smaller stores, but actually full-size stores as we go forward. So we're going to continue to invest in our business. We're here to grow and provide great returns for our shareholders. And I'm playing the long game, and I'm as bullish on Target as you are.
That's what I want to hear. That's what I want. That's Brian Cornell, Chairman and CEO of Target. This stock deserved to be up, and I got to tell you, it's not done going higher. Thank you, Brian. That money's back after the break.
Coming up, has a strong demand for data defense driven this stock to a state of security? Palo Alto reports, and Cramer's got the CEO. Next.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.